Welcome back to the channel, everyone. Today, we're diving into the top 10 tips for investing your money in 2025. Whether you're a seasoned investor or just starting out, these tips are designed to give you the tools and knowledge you need to navigate the ever-changing financial landscape. We'll break down some key strategies, explore some exciting opportunities, and most importantly, make sure you're set up for success in the years to come. So grab your notebooks, let's dive in, and make your money work as hard as you do. Alright, let's kick things off with the golden rule of investing diversification. It's a strategy that can help you manage risk and potentially increase your returns over time. Think about it like this. If you invest all your money in a single stock and that company goes belly up, well, you're out of luck. Your entire investment could be wiped out in an instant. But if you spread your investments across different asset classes like stocks, bonds, and mutual funds, real estate, and even commodities, you create a safety net. This way, the performance of one asset doesn't dictate your entire financial future. Imagine those asset classes as different baskets. Each basket holds a portion of your wealth. Now, if one basket takes a tumble, the others are there to cushion the fall. This reduces the impact of any single investment's poor performance. The key here is to find the right balance for your risk tolerance and financial goals. Diversification isn't just about spreading money around, it's about strategic allocation. If you're younger and have a longer time horizon, you might be comfortable taking on more risk with a larger portion in stocks. This can potentially lead to higher returns over the long term. But as you get closer to retirement, shifting towards a more conservative approach with bonds might make more sense. This helps protect your nest egg as you prepare to draw from it. By spreading your investments, you're essentially hedging your bets and setting yourself up for long-term success. Diversification is not just a safety measure, it's a smart strategy for growth and stability. Now, let's talk tech. The technology sector is one of the most dynamic and exciting areas to invest in today. It's no secret that the technology sector has been absolutely exploding for years. From the rise of the internet to the proliferation of smartphones, tech has been at the forefront of innovation. I mean, think about it, we're living in a world dominated by smartphones, artificial intelligence, and self-driving cars. These advancements are not just trends, they are shaping the future. Investing in technology stocks is like investing in the future. You're putting your money into companies that are driving the next wave of innovation. These companies are constantly innovating, disrupting industries, and changing the way we live, work, and play. From virtual reality to blockchain, the possibilities are endless. But here's the thing, not all tech stocks are created equal. Some may offer incredible growth potential, while others might be more volatile. You've got your established giants like Apple and Microsoft, which have a proven track record and a strong market presence. But there are also tons of smaller, up-and-coming companies with the potential to become the next big thing. These startups can offer significant returns if they succeed. The key to successful tech investing is research. You need to dig deep into the companies you're considering. Take the time to understand the companies, their products, their competitive landscape, and their long-term vision. This will help you make informed decisions. Look for companies with a proven track record of innovation, a strong management team, and a solid financial position. These factors can indicate a company's potential for long-term success. Spread your investments across different subsectors within technology to minimize risk and maximize your potential returns. Diversification is key to a balanced and successful tech investment portfolio. Okay, let's talk about investing with a conscience. More and more people are realizing that they can actually align their investments with their values. That's where sustainable investing comes in. Sustainable investing, also known as ESG investing, is all about putting your money into companies that prioritize environmental, social, and governance factors. We're talking about companies that are committed to sustainability, ethical business practices, and making a positive impact on the world. Studies have shown that sustainable investments can perform just as well, if not better, than traditional investments. Companies with strong ESG practices tend to be more resilient, better managed, and less risky in the long run. Investing sustainably is a win-win. You get to grow your wealth while supporting businesses that are making a real difference. be a good time to review your portfolio and make sure you're comfortable with your asset allocation. Let's talk about an asset class that's near and dear to my heart: real estate. Real estate can be a fantastic way to build wealth and diversify your portfolio. For one, it's a tangible asset. Plus, real estate tends to be a good hedge against inflation. When prices of goods and services go up, so do property values and rents. There are tons of ways to invest in real estate, from buying a rental property to investing in REITs, which are like mutual funds for real estate. The key is to do your research, understand the local market, and be prepared to put in some work. Real estate isn't a passive investment, but it can be a rewarding one if you're willing to put in the effort. Okay, let's talk about everyone's favorite volatile topic: cryptocurrency. Crypto has been on a wild ride over the past few years with massive highs and gut-wrenching lows. It's a decentralized digital currency, meaning it's not controlled by any government or financial institution. It's based on blockchain technology, which is a secure and transparent way to track transactions. Cryptocurrency is still a very speculative investment. Its value can fluctuate wildly, and it's not for the faint of heart. If you're thinking about dipping your toes into the crypto waters, here's my advice: only invest what you can afford to lose. Do your research, understand the risks involved, and don't let the fear of missing out cloud your judgment. Start small, diversify your crypto holdings, and be prepared for a bumpy ride. Let's face it, not all of us have the time or desire to research individual stocks and manage a complex portfolio. That's where index funds come in. Index funds are like the set-it-and-forget-it option of investing. They're mutual funds or ETFs that track a specific market index, like the S&P 500. Instead of trying to pick individual winners and losers, you're essentially investing in the entire market. This gives you instant diversification and exposure to a wide range of companies. Index funds are known for their low fees, which can make a big difference in your returns over time. They're a great option for passive investors who want to simplify their investment strategy and still achieve solid long-term growth. Listen, we live in an interconnected world. What happens in China, Europe, or anywhere else can have a ripple effect on the global economy and your investments. That's why it's so important to stay informed about what's going on in the world. Pay attention to major news outlets, read financial publications, and follow thought leaders in the investment world. The more you know about what's happening globally, the better equipped you'll be to navigate market volatility and capitalize on opportunities. Okay, so you've diversified your portfolio, invested in a mix of assets, and you're feeling pretty good about things. But here's the thing. Your investments don't just sit there and behave themselves. They grow at different rates, and your asset allocation can shift over time. That's why it's important to rebalance your portfolio regularly. Rebalancing is like hitting the reset button on your investments. It's the process of selling some assets that have performed well and using those profits to buy more of assets that haven't done as well. This helps you manage risk and ensure that your investments stay aligned with your long-term goals. Most experts recommend rebalancing your portfolio at least once a year, or whenever your asset allocation deviates significantly from your target. Alright, we've covered a lot of ground today, but here's the most important tip of all: don't be afraid to ask for help. It's a sign of strength, not weakness, to seek guidance when navigating the complex world of finance. Look, I get it. Investing can seem intimidating, especially if you're just starting out. The sheer volume of information and the potential risks can make anyone feel overwhelmed. But you don't have to go it alone. There are professionals out there whose job is to help you make sense of it all. Seeking professional advice from a financial advisor can be a game changer. They bring expertise and experience to the table, which can be invaluable. A good financial advisor will take the time to understand your financial situation, your goals, your risk tolerance, and help you create a personalized investment plan. They can offer insights that you might not have considered. Think of them as your financial coach, there to guide you, answer your questions, and help you make smart financial decisions. They can provide the clarity and confidence you need to move forward. Do your research, find an advisor you trust, and don't be afraid to ask for help. It's important to feel comfortable and confident with the person guiding your financial journey. Remember, you're in the driver's seat when it comes to your finances, but it never hurts to have a co-pilot along for the ride. With the right support, you can achieve your financial goals and enjoy peace of mind. Thanks for watching, everyone. I hope you found these tips helpful and feel empowered to take control of your financial future. By following these tips, doing your research, and staying informed, you can set yourself up for success. If you found this video helpful, please give it a thumbs up, subscribe to the channel for more investing advice, and hit that notification bell so you don't miss any future uploads. See you in the next video.